Hello everyone and welcome to Explain the Charts. Today is May 1st, 2026, and we are performing an in-depth analysis of the QQQ, which tracks the Nasdaq 100 index. The markets are currently operating in a very complex environment where traditional finance meets the digital frontier. As of our most recent close, the Nasdaq 100 hit a staggering 27,452 points, marking a new all-time high. Before we jump into the charts, let's look at the headlines that are driving this momentum. One of the biggest news items is the SEC's approval of Nasdaq's plan to tokenize securities. This, combined with the Kraken partnership for 24/7 trading, is a massive fundamental shift for the index. However, it is not all smooth sailing as the ongoing conflict in Iran has significantly disrupted the IPO pipeline for Q1 of 2026. Taking a look at the daily chart for QQQ, we can see a clear long-term bullish trend that has been in play for over a year. Notice the significant support level established back in April of 2025 near the $420 mark. There was a massive reversal on April 9, 2025, where the price surged over 12% in a single day. This spike likely correlated with early rumors of the regulatory shifts we are seeing finalized today. Since that jump, QQQ has used the $500 level as a psychological floor during several pullbacks. The current price of $667.74 puts us in price discovery mode, which is both exciting and dangerous for traders. Volume has remained relatively consistent, though we saw a peak during the late 2025 rally. We are currently seeing the market shrug off the inflation fears that dominated early 2024. The always-on market expansion mentioned in the news is likely providing a liquidity premium to these tech caps. However, the IPO drought caused by the Iran conflict could lead to a lack of fresh growth names in the index. Let's narrow our focus to that incredible move in April of 2025. You can see how the candle on April 9th completely engulfed the previous several weeks of trading. This was a classic V-shaped recovery that caught many bears off guard. At that time, the 10-year Treasury yields were still a primary headwind, much like the 4.9% levels we saw in late 2023. The move from $416 to $466 in one day served as the foundation for the 2026 bull run. If we look closely, the volume on that day was one of the highest in the entire dataset. Institutional buying was clearly present as the market anticipated the AI-driven earnings boom. This period marked the transition from fear of high interest rates to the embrace of AI-driven productivity. It is important to remember these historical levels because they often act as long-term magnets if a correction occurs. Even today, the $460 level remains a critical area of historical significance for the macro trend. The resilience shown here is a testament to the dominance of the Magnificent Seven companies. As we move back to the current date, we must ask if the current valuations are overextended. Now, shifting to the 1-hour chart, we can analyze the immediate price action leading into May 2026. The last few trading sessions of April show a steady climb with minor consolidation periods. We can see a local support level forming around $620, which was tested multiple times in mid-April. The hourly trend shows a series of higher highs and higher lows, which is a textbook bullish signal. The VWP has stayed consistently below the price, indicating that buyers are in control of the intraday momentum. Resistance is currently being felt near the $668 mark, which was the high of the April 30th session. Notice how the transactions increased significantly as we approached the end of the month. This likely represents portfolio rebalancing as funds adjust to the new Nasdaq 100 record highs. The launch of the Nasdaq Texas exchange could be providing extra regional buying pressure here. Short-term traders should look at the 640 level as a primary area of interest for potential long entries. A break below 640 would be the first sign of a shift in the hourly market structure. Until then, the path of least resistance remains firmly to the upside. To get an even more granular view, we turn to the 15-minute chart for the final day of April. The session opened at 665.35 and saw an immediate dip to a low of 657.56. This dip was quickly bought up, creating a long lower wick that signaled strong demand. By midday, the price stabilized and began a slow grind back toward the day's highs. We saw a surge in volume during the final 2 hours of trading on April 30th. This end-of-day rally pushed the QQQ back to $667.74, closing near the top of the range. The price action at 1946 Universal Time Coordinated is particularly interesting, showing a massive volume spike. This likely reflects the market's reaction to the latest AI survey results mentioned in the news. Business leaders are clearly doubling down on AI investments, and the chart reflects that optimism. Resistance at 668 to 669 is the primary barrier for the bulls to overcome in the next session. If we can clear 669 on high volume, we could see an extension towards 680 very quickly. Conversely, a failure to hold 665 early in the next session could lead to a retest of 660. Intraday volatility is increasing, so tight stop losses are recommended for active traders. Watch the interaction between the price and the 15-minute VWP for trend confirmation. The closing strength suggests that many investors are comfortable holding over the weekend. Recapping our key levels, the primary resistance is sitting at $669, which is the current 52-week high. Support is found first at $657, followed by a much stronger structural floor at $620. For our unbiased predictions, we believe there is a 65% chance of a continuation to $680 by mid-May. This bullish scenario is reinforced by the SEC's tokenization approval, which opens up new capital flows. There is a 35% chance of a correction back to $600 if geopolitical tensions in Iran escalate further. A significant escalation could weigh on tech valuations as oil prices might spike and hurt margins. In the long term, we remain bullish as long as the $580 level on the daily chart holds. Traders should keep a close eye on the SM manufacturing PMI data coming out soon. Earnings from energy giants like Exxon and Chevron could also indirectly influence tech sentiment. Always be mindful of the higher-for-longer interest rate narrative if inflation data surprises to the upside. Thank you for watching this deep dive into the QQQ Nasdaq 100 on Explain the Charts. Please remember that this video is for educational purposes only and does not constitute financial advice. Investing in the stock market involves significant risk and the potential for loss of capital. The data and analysis provided are based on historical trends, which do not guarantee future results. It is essential to perform your own due diligence and research before making any investment decisions. Consider consulting with a certified financial advisor to discuss your specific financial situation and goals. Market conditions can change rapidly, and news events can cause unpredictable price swings. Stay informed, stay disciplined, and always manage your risk appropriately. Thank you for joining us today, and we will see you in the next analysis. Be sure to like and subscribe for more in-depth chart breakdowns. This is Explain the Charts signing off for May 1st, 2026.